Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. It's a Tuesday morning. I'm Reema Tendulkar. With me is Vivek Iyer. And it's a super strong Tuesday morning as we speak. The Nifty surged 250 points, well above at that 22,750 mark. And in a very short span, we've covered considerable ground. So earlier in this month, the Nifty low was just shy of the 22,000 mark. It was 21,965. So from that level, it's been a good 800-point recovery on the Nifty. The mid-cap index has recovered 5%. The small cap index has swiftly recovered 7%, all from the recent March lows. And this happened just a couple of days back that the recovery started. And we've been picking up ground, small cap index in particular. Look at the advanced decline ratio today. Nearly 5 stocks advancing for 1 in the red. Mid caps are outperforming yet again. The mid cap index has crossed that 49,000 mark. And the good part is leadership is coming in from the 2 key sectors, banks and IT. Up until now, it was always one rising and the other one faltering. But today, both the mid cap, the banks and the IT are moving in step with the frontline indices. And that's where the strength comes in from.
Absolutely. Good morning, Reema. Like you mentioned, very good to see markets completely, and it's across the screen that you're seeing green, the mid-cap, small-cap index, both very, very strong. Like you mentioned, it's the frontline bank indices, the frontline bank index that's doing very well. ICICI Bank, one of the top gainers in this session today. The FMCG pack, especially some of the names that have seen a significant sell-off in recent past, have bounced back quite sharply. GCPL, a positive note coming in from Goldman Sachs in this particular name. Warren Beverages, Citi adds this particular name to its positive catalyst watch. These names have recovered. And even names like Colgate, Palmolive and Marico are seeing some buying in today's trading session. The other set of stocks that have seen some recovery is actually the defense pack. So names like HAL, UBS sales that FY26 may be an inflection year. They also feel that the recent sell-off could be overdone. And on the back of that, they feel that this particular stock, HAL, can do quite well. Ircon is the other stock that's doing quite well, and it's on the back of an order cheer. And the realty pack, something that saw significant selling pressure in the recent past, that also has seen quite a bit of buying. Today's trading session, DLF up almost 3%.
Many of these stocks retracing some of the losses that started towards the end of September. But let's get to the big story that's happening in the insurance sector. Bajaj Finserv, top index loser also, by the way. Allianz is all set to exit Bajaj Insurance joint ventures after 24 years. So Bajaj Finserv and the promoter entities will be acquiring 26% from Allianz in both the life and the general insurance JV, and the amount that they will be shelling out will be 24,180 crore rupees. Yash is here joining in with the details on this. Yash.
Well, certainly a very big shake-up for India's insurance sector and a big moment when it comes to Bajaj Group's investment towards India's insurance sector. Late last night, that important news came through that Bajaj Finserv and its promoter entities will be acquiring that entire 26% stake held by Allianz in both life insurance as well as the general insurance JV. That is Bajaj Allianz Life Insurance and Bajaj Allianz General Insurance. The share purchase agreement for this transaction was signed yesterday, and as per that agreement, post this particular transaction, Bajaj Finserv and its promoter entities will have 100% control when it comes to both life insurance as well as the general insurance entity. As far as funds that Bajaj Finserv and its promoter companies will have to pay towards acquisition of this stake, Bajaj Finserv and its promoter companies will be paying about 13,780 crore rupees for the 26% stake in the general insurance entity. This will value Bajaj Allianz General Insurance at about 53,300 crore rupees. When it comes to the life insurance entity and the 26% stake to be acquired there, Bajaj Finserv and its promoter companies will be paying about 10,400 crore towards that 26% stake, valuing Bajaj Allianz Life Insurance at about 40,000 crore rupees. Most importantly, the joint venture between Bajaj Finserv as well as Allianz will get terminated as soon as the first tranche of 6.1% stake is acquired by Bajaj Finserv and its promoter entities. A quick look at the valuations. The valuations have been quite fair as far as the transaction is concerned. When it comes to the general insurance entity, the transaction will value that entity at 4.9 times price to book value and 2.6 times price to GDPI. This is on a trailing basis, that is FY24. For Bajaj Allianz Life Insurance on a trailing basis for FY24, the deal values the company at 1.84 times price to embedded value. Post this particular transaction, what will be the shareholding and what stake will be acquired by individual entities out of this 26% stake? Bajaj Holdings and Investments, the holding listed company, will acquire the most crucial part of this 26% stake, that is 19.95%. Bajaj Finserv will acquire about 1.01% stake, and Jamnalal Sons will acquire the balance 5.04% stake. There's an important statement which has come from the companies involved in this transaction. They say that once the joint venture between Bajaj Finserv and Allianz is terminated, the Bajaj Group and Allianz aim to independently pursue their insurance strategies in India.
Thank you, Yash, for all those details. And the other big stock in focus today is PB Fintech. If you remember, the stock had fallen 10% over the last two sessions after the company announced its plan to invest nearly 700 crore rupees, 696 crore to be precise, in its subsidiary PB Healthcare Services Private Limited in the next financial year to expand operations. In the new venture, PB Healthcare, co-founder of PB Fintech, Yashish Dahiya, will hold a 4.2% stake for an investment of 87 crore rupees. Alok Bansal will hold 2.1% stake with an investment of 43.5 crore, while Sarabveer Singh, along with Mandeep Mehta and Bhaskar Joshi, will hold about 0.1% stake. In fact, earlier today, we had a chat with Yashish Dahiya, and he said the primary objective of shareholders agreeing to participate in PB Healthcare must not be profit. There is always a chance that things don't work out. He said there is a 50% chance that the foray will be successful, 50% chance the foray will fail. He also added that PB Fintech's stake in healthcare venture will fall to 25% versus the current 33.6%.
By the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. Financial return is not the sole driver for Policybazaar either. The primary objective of Policybazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. I just wanted to clarify, the cash has not come in yet. The cash will come in over the next 120 days, right? Yeah, but without the cash, nothing can happen. No, I just wanted to explain. The money will come in perhaps by July end. So we should have an operation ready, some sort of an operation ready by about December, which is about 5 months after the cash comes in.
And the street is also taking note of the upgrade on PB Fintech today, and that's come in from Kotak Institutional Equities. They've upgraded PB Fintech to an add. Their target price stands at 15.25. They've added that, yes, the stock is corrected, and that's reflecting the concerns on growth and profitability. But according to Kotak, the company has the ability to deliver 1.8 to 2 times industry-level growth, along with improving leverage, which will drive strong profitability. In fact, last week, we also spoke to Nilesh Shah of Kotak AMC on PB Fintech's healthcare foray, and this is what he had to say.
Many other players in this space, hospital companies moving into insurance companies. Here is an insurance distribution company trying to kind of get into healthcare to improve the consumer experience. So I clearly believe that it's honestly not a very material kind of event. Unfortunately, the market sentiment is not really the best right now, and therefore these are probably being looked upon as markets as being some bit of a distraction kind of thing. But I honestly don't think this poses any kind of a structural headwind to their medium to long-term growth plans. And I don't see that as an issue of any serious capital misallocation.
Well, PB Fintech recovering sharply in today's trading session, up over 3%. But let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today we are focusing on crude.
Oh, well, yes, that is because the crude oil prices continue to hold above $70 a barrel. Well, that's the case that we've seen across commodities where we are trading in the positive, even as we are dealing with a lot of uncertainty and contradicting fundamentals there. But as you can see on your screens, we're way off the kind of lows that we saw the prices in the previous week there. So some more buying recommendations continuing here. The support clearly comes in from the fact that the US dollar index is trading at a 5-month lows. That has been supportive. And then it is also about expectation of more stimulus that could be coming in from China. We already have seen it being initiated on Sunday over the weekend, and there is some more expected. Apart from that, it also is about US launching airstrikes on Houthi rebels at Yemen. So the geopolitical tensions also continue to support. On the other side, the street is also watching out between the conversation of ceasefire between Russia and Ukraine, and then there are global growth concerns, tariff trades, and all of that continues to weigh onto the market as well. And then there was a report from OECD where they have cut the output growth for G20 countries going forward for the rest of this year. That could be weighing onto the markets, the reason that you haven't seen the prices run up very strongly. So as I said, there is contradicting fundamentals equal on both sides weighing onto the markets there. More importantly, it is going to be about the US Fed meeting. The 2-day meeting starts today. We will hear some announcement tomorrow. But apart from the US, there also are central bank meetings coming in from Japan and England, and the street will take further cues from this one.
Thank you very much for that, Manisha. We will slip into a very short break on that note. On the other side, market technicals lined up with Apurva Sheth from Samco Securities. Stay tuned.
Welcome back. You're watching CNBC-TV18. It is now time for the big news maker, the big CNBC-TV18 exclusive. The news coming in from the insurance space. Allianz is set to exit the Bajaj Insurance joint ventures 24 years after they got into an alliance. Bajaj Finserv and Bajaj Group promoter entities will acquire 26% from Allianz in Bajaj Allianz Life and Bajaj Allianz General Insurance for 24,180 crore rupees. The transaction will give the Bajaj Group 100% ownership in both Bajaj Allianz and Bajaj Allianz General Insurance, as well as the life insurance business. Joining me now to talk to us about the road ahead post the exit of Allianz is Sanjeev Bajaj, the Chairman and Managing Director of Bajaj Finserv. Sanjeev, many thanks for joining us here on CNBC-TV18. It hasn't come as a surprise. This was anticipated. It's also been a fair amount of an overhang as far as the businesses were concerned. But finally, this 24-year alliance, this 24-year joint venture partnership has come to an end. I want to understand from you to start with, Sanjeev, how prepared are both businesses for this exit at this point in time?
Shireen, good morning. And let me start by saying that this has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. Once again, reinforcing Bajaj Group's commitment and belief in the India opportunity. As far as both our companies are concerned, these are managed by very well qualified boards and by senior teams that have been with us for very long periods of time. And hence, we see no change at all at any operational level. Our partnerships will continue to be the same. Our distribution continues to be the same. Products are the same, so no change on the ground.
So no change at all on the ground as far as operation is concerned, Sanjeev. But let me ask you whether you are going to scout for another partner, whether that is at all something that you would like to even consider at this point in time, or do you believe that going solo now after this 24-year arrangement is the preferred route for you?
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
Okay, so going solo, that is the route forward. That's the road ahead. Let me also ask you about the possibility of listing, Sanjeev, because this has been the regulator's nudge to industry as well, that large insurance companies need to consider a public listing as well. With this eventuality out of the way now, is that an imminent possibility for you?
Well, as you mentioned, Shireen, correctly, the regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well, given the significance of this current action with Allianz exiting the insurance companies. It will take us some time for the rebranding once we get all the regulatory approvals, etc., etc. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator and put out a path forward.
But, you know, indicative timeline, Sanjeev, and I understand that you are going to go through this process of Allianz exiting, which will, of course, require the rebranding as well as other regulatory approvals. Number one, by when do you anticipate all of that getting done? And two, you know, what could a realistic, practical timeline for an eventual listing be? Are you working towards an FY27 kind of scenario?
I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz, FinServ as a shareholder, has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. As you know, both the companies are very well capitalized. Our solvency positions are the highest in the industry. The businesses have not really needed external capital now for over 10 years. So we have truly built two businesses that are balancing top line and bottom line, focused on customers as best as I think is possible in this country without being immodest about it. And hence we are in no hurry. Yet we understand the nudge from the regulator. So in a suitable time, the board will consider this, and once it comes out with clear direction, we will actually share it.
Okay, we'll wait to hear from you on that. But Sanjeev, you know, a little bit about what happens now as far as Allianz is concerned. And I know that you don't really have a say in that any longer. But what we did see from Allianz in its press release last night was that it's going to use the proceeds to make strategic bets in India and look at opportunities in India. I just want to understand from you, is there any kind of a cooling off period that's been factored into this arrangement, into the agreement between you and Allianz as they exit?
And the answer to that, Shireen, is that once the first part, the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approvals, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they're free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
And just to understand that, so you're saying that once that 6.1% is done with, Allianz is free to tie up if it wishes to with any other Indian insurance company, any other Indian promoter, if it so desires?
Very much so. Along with that, technically the JV agreement falls away, the name change happens and stuff, but yes, in effect.
So how do you see the competitive landscape? It seems pretty clear that Allianz is going to be in India, who we don't know quite yet. But how do you see the competitive landscape emerging post this transaction ending and the possibility of another transaction starting?
You know, there are two ways you can look at this. There are 50 insurance companies, so there will be a 51 in what is a crowded and competitive space. We have seen that for the insurance companies started in the last decade or so, it's not been very easy to build scale profitably just because the large companies are doing a great job. On the other hand, our own long relationship with Allianz tells us that they're a high quality company and we would welcome a sane competitor, a high quality, measured, conservative competitor into the market to just help balance the market. But I think it takes some time for them to get in, assuming that's what they will finally do. I've also read the press release like you, and it takes time to build a good quality business.
Well, speaking of building a good quality business, Sanjeev, I want to understand what the growth appetite and the growth aspiration is for both businesses from here on. IPO is a separate matter altogether, but let's talk about growth. It's been a relatively slower year in comparison to what you've historically seen. What's the expectation and the anticipation from here on in terms of growth?
You know, the general insurance business is very much an asset-led business. And since we've seen a slowdown in asset purchases, you've seen that industry slow down to 10-12% growth. We've been growing a little faster than that, but also with a key eye on being fair to customers and on profitability. On the life insurance side, the last 7 or 8 years has seen Bajaj Allianz Life significantly outgrow the market with a set of new relationships on distribution, new products, and building top line and bottom line quite well. Given the significant change that happened last year with surrender values, it has been an opportunity for us to rejig again our focus and look at growth with a much higher level of profitability. And that's what the team is currently working on. So I see both the businesses growing at healthy levels at or a little higher than industry levels in the coming years. Keeping in mind also that we're going through a significant period of global uncertainty. India is one of the few markets which is still managing to grow 6+%. And I think that's something for us to celebrate. But of course, plan how can we get to 7, 8, 9%. And I'm very confident that you will see this in the coming decade. And for low penetration industries like insurance, it's going to be a great decade ahead for us.
Well, you believe that it's going to be a growth decade ahead for the insurance sector, which continues to be underpenetrated. But it's also happening at a time where the FDI regime for the insurance sector has changed. And ostensibly, that's the reason I would imagine that Allianz has decided to exit this 24-year partnership, Sanjeev. So did it eventually boil down to the fact that they wanted majority?
Very clearly, I think that's something that you have to ask Allianz and have them answer. But as they have said, India continues to be on the strategic radar for them, and we'll hear more as they move ahead.
Do you believe that we are likely to see more foreign players looking at the India opportunity, specifically the India insurance opportunity, now with this FDI regime change and 100% FDI now on the table?
I think they should, because when you look at, again, as I said, the companies in the last 10 years, most of them have stayed small. They are not able to bring in the right amount of capital. They end up then cutting corners to build growth. We need good quality players. Because keep in mind, insurance is a long-term business. It's a business with a very high level of risk. You get your risk assessment right, you can have one large incident in the general insurance space that can wipe out your capital, get you bankrupt. On the life space as well, guarantees, long-term guarantees have been known to wipe out businesses. Hence, you need good quality promoters, companies that understand these businesses. Plus, we have such low penetration levels in India that it doesn't worry me at all that as Bajaj continues to grow, there will be the opportunity for many more players because we need so many more Indians to get that security cover.
Right. You said that there's unlikely to be any operational change at this point in time, Sanjeev. It has been a partnership that's gone on for over 2 decades. So I would imagine that there will have to be a fresh roadmap of some sort that you draw up. And I'll ask you this in the context of another eventuality, which is on the anvil now. Rajiv Jain, 31st March is just around the corner. What do you believe is likely to be the role that Rajiv is likely to play as far as each of these businesses are concerned?
Firstly, as I said, a board of both the insurance companies controlled by Bajaj has been running the business for over a decade, and there is going to be no change, I can tell you, on the ground. Day-to-day competitive activity continues, but there is going to be no significant change. As far as Rajiv Jain is concerned, we have a board meeting coming up later this week, and Rajiv is fully committed to the group and the business. And the board will evaluate, as we know his term comes to an end of March. The board is evaluating next steps, and you will hear about it soon.
If I may, because this is something that the market and the street is watching very closely, and different scenarios are being painted at this point in time. I wonder if you've had a look at that. But, if you could give us some color and clarity on what some of the options are that you are exploring, that the board may consider as far as Rajiv's engagement post the 31st of March is concerned with the group.
Well, I think the board meeting is in 2 days. This is the NRC and the board that will decide that. I don't have any absolute right on that, so let's wait 2 days.
But he's very much going to continue to be with the group in some form or fashion, perhaps in an elevated form or fashion. 2
days, he's fully committed to the group.
Okay, I'll leave it there. I did try, Sanjeev, but I also want to understand from you the contours of this transaction. By when do you think the 6.1% will be done, and the funding for the transaction, as well as far as the promoter group companies are concerned?
So again, Shireen, this requires IRDA and CCI approval, which we hope will come in the coming months. But naturally, we have to leave it to those regulators to decide. We will be in the process of applying our post yesterday's signing of the agreement. The funding is where of the 26%, a little over 1% will be bought by Bajaj Finserv, so that Bajaj Finserv then is in absolute control of both the insurance companies. And keeping in mind the speed with which we needed to and moved ahead, and the funding opportunities available, because Bajaj Finserv is a unregistered CIC, a core investment company. It cannot borrow. So keeping in mind that the Bajaj Group has lent support and reinforced its commitment to Bajaj Finserv and to the two insurance companies by Bajaj Holdings and one of our group companies, Jimlal & Sons, chipping in for buying the rest of the stake. So that is the current plan right now.
Sanjeev, if I could understand from you in terms of prioritization now, as you wait for the process of regulatory approvals to come in, what will the next steps be? I believe that you've also held an employee town hall this morning, I would imagine, to give clarity to internal stakeholders on what the future looks like. If you could share some of that with us as well.
It's a big event for us, and that's why it's our responsibility to reinforce our commitment, support as a group, as a board, as senior management, whether it's to our customers, to our employees, to our partners. And we've started that process from today, and that's why we had the town hall this morning. Our senior leaders will reach out now to all our large relationships, will reach out to the agents who've been supportive of us for over 2 decades. To give them the comfort that nothing changes. With our 74% ownership, I think that's reasonably obvious. But these are the times where we need to over-communicate, we need to reach out, we need to handhold if somebody has a worry or an apprehension. And we will do that in the coming weeks as we line up our funds as well, so that as and when approval comes, we can move ahead. Both Allianz and we are clear that we want to get this over with as soon as we can, so that we both go our own way into doing what we need to do. We are very excited, as I mentioned earlier, about the prospects about insurance in India. And with this additional flexibility that we have of 100% control of both companies in the group, it allows us to build these businesses with our own ambition, our own focus, our own entrepreneurship, our own assessment of risk.
And I'll pick up from that last point that you made about your own growth aspirations, your own ambition, as well as your own risk-taking ability now that it's 100% controlled by you. You said that you will, of course, try and deliver on industry-leading growth as you have been doing. But does the growth ambition, does the risk-taking appetite change now, Sanjeev, with you in full control? And if you can quantify that for us, what it could mean potentially as far as business outcomes are concerned.
When you look at both the companies, you will see a great balance in top line and bottom line. And this has been core to both partners. But naturally, each partner has their own priorities. You have one partner that works in a European environment where 2% growth is great. You have another partner that works in an Indian environment where 15% growth seems to be low. Now that there is one promoter running the show, we will review some of these opportunities going forward. I don't have an answer beyond that. The agreement has just got signed last week as our board goes with the management into our long-range strategy plan later in the year. Some of these things will evolve.
Yes, I would imagine that some of these things will fall into place. But if I may ask you two quick regulatory questions, Sanjeev, which of course the industry is grappling with at this point in time. One, of course, is the government and the regulators nudge as far as the bancassurance side is concerned, and the reliance or the over-reliance in the view of the government as well as the regulator on bancassurance. How do you see that impacting the sector, and what do you believe it could potentially mean as far as you're concerned? Do you imagine being a net beneficiary if the wheels were to be slowed down on that front?
Very clearly, we will be a net beneficiary because we don't have a exclusive tie-up with any bank. But having said that, our general insurance company has over 250 bank tie-ups, the largest in the country, even though we are not promoted by a bank. Our life company has, again, more than 50 partnerships with banks, and that's growing. But yes, as we open up distribution, it will naturally end up being beneficial to companies like us, which is not part of a banking conglomerate. I believe the interest and direction towards this should be based on what is right for the customer. Because on the other hand, you have also banks, they have their own ownerships, they have their own focus areas. So while in my own selfish interest, naturally, as it opens up, it's great for us. If it's good for the customer, and I believe it is, it makes sense to open up. And most banks have opened up. There are just a few that are still closed. In addition, what's important is for us as an insurance company, we have de-risked distribution. So if you look at the business we get from banks, what we get from agency, what we get from direct channels, our own proprietary team is very well balanced. And this is something we have done in the last 7 or 8 years so that we are not reliant on any one large partner. Doing that makes you unnecessarily dependent.
Right. My other question, again, to do with the regulator, is on the possible capping as far as commissions are concerned. Again, nudging industry that, look, take self-corrective actions or we will have to step in. What do you make of that, and how do you believe industry is likely to respond?
So this is something that the regulator did a great job a couple of years ago by defining an overall cap on expenses, including commissions. And that is the right way to go. You don't want to be micromanaging below that. There are certain younger channels where we end up paying a higher commission, but we are still within the overall limit. When we go direct, we have no commission, but our expense costs are higher, especially the fixed cost of running a digital direct business. So if you micromanage, you end up losing on innovation. I think the overall cap has been a great direction that the regulators put in place. There are still some smaller companies that are busting that cap. They have to fall in line and the regulator has to work with them. But overall, as long as you're within the cap, the policyholder is protected.
Okay, so before I let you go, Sanjeev, and we do appreciate you joining us here on what has been a busy morning for you. But before I let you go, I just want to reiterate that no leadership changes at either business at this point in time. Is that what you're confirming to us? And two, you spoke about a decadal opportunity for growth. Again, leave us with some color of what the decade ahead could potentially hold.
So clearly, no leadership changes in the insurance companies. The same senior leadership continues and is committed to building the business going forward. The next decade is going to see India moving from $2,700 to $2,800 per capita to 2.5 times that. We have seen in many parts of the world when per capita income crosses around $3,000, by and large, the savings required for somebody for security of the house, children's education, health, basic purchases are taken care of. And the remaining money ends up going into financial services. It goes into financial assets because those then end up being productive and give a higher return. And that is something that we're going to see in the coming decade. This is what gives us that confidence that this, driven by high quality businesses that are focused on the long term with solid teams, a significant focus on technology, leveraging the cloud, leveraging AI, and you've heard about some of the early stuff that we're already doing in AI, is going to enable us to create competitive businesses going ahead.
Well, Sanjeev, it's been a pleasure. Many, many thanks for joining us and giving us some clarity on what the road ahead looks like. Important to note, Sanjeev Bajaj saying that they will go alone as far as the insurance business is concerned. They're not looking at bringing on a new partner post the exit of Allianz. No leadership changes at this point in time being envisaged, and the appetite for growth and for risk perhaps will be higher at the end of this. Sanjeev, many, many thanks. We look forward to having a deeper conversation with you as you crystallize some of your plans for the future. Appreciate you joining us here this morning. That's the Chairman and Managing Director of Bajaj Finserv, Sanjeev Bajaj, also clarifying that in 2 days a board meeting will take a call on Rajiv Jain's future with the group. Seems very clear that Rajiv Jain will be committed to the group, but what exactly the role will be is going to be decided by the board. That's the big CNBC-TV18 exclusive. We will take a break here, but return with the market action right after this.
Welcome back to Trading Hour. Well, Nitin Raheja from Julius Baer joins us to discuss market fundamentals and his top sectoral picks. Thank you so much for joining us, Nitin. First up, you've written quite deeply as far as market valuations are concerned. In terms of the key indices, especially the Nifty and the broader end of the markets, where do valuations stand now currently? And at this point of time, are you looking to deploy incremental capital both in Nifty, the index stocks, as well as some of the broader index stocks?
Yeah. So I think when you look at how valuations stack up, right, I think our belief is that a large part of the correction as far as the large cap, Nifty 50 index is concerned is probably done with. We are probably close to searching bottom, maybe another 4 or 5% from here. And that's because when you look at a 10-year average on this, currently they're trading, the market is trading at below 10-year averages. So I think we are seeing that part of the index largely being done. And it's only fair because when you look at the composition, a lot of the larger bits of the index, such as if you take the Nifty bank, it's really hasn't done much, and the valuations are very attractive. If you take the larger names in oil and gas, and even if you take IT, it's corrected. So a lot of that has already been done, and so it's our belief that the margin of safety in the larger cap Nifty index is far higher. As far as mid and small cap is concerned, we believe that given the kind of run-up that they've had, they yet trade at least about one standard deviation higher than their long-term averages. So hence, there is yet some way to go for of pain out there in both those indexes.
Nitin, hi, morning, and thanks for joining in. So just quickly first tell us, as we start the interview, how is your portfolio constructed right now? What are your key bets?
So we have a large cap bias in our portfolio. In fact, we have different portfolios. So, if we take our global portfolio, we are primarily almost 85-90% large cap oriented. If you take our domestic portfolios, we have almost a 65% large cap tilt in that. Now, within that, of course, the BFSI and the banking space is an area which we believe is looking very good. And that's primarily led by the fact that if you look at one of the key reasons for also the slowdown recently, it was the whole tightening by the RBI and the huge regulatory overhang that existed because we had seen this unbridled growth in credit and especially in unsecured loans. So we had seen a big tightening happen there. In the last sort of month, 45 days, we've seen the RBI, see the impact of that tightening, create a slowdown, and banking system was tight. And now we've seen a loosening out there. Plus, I think intuitively, the whole policy moves are of, loosening the regulatory framework. So I think in that sense, banking and finance is looking good. We clearly see that there is a call towards rate cuts. We saw the first of them happen recently. It's going to be a little more long drawn and more shallow, but clearly I think directionally we are seeing that. And hence we believe that one of the largest overweight positions we have is banking. On IT, which is our second largest holding, we are largely neutral given the uncertainty as far as the US is concerned. Consumer and discretionary is especially premium consumer discretionary is another large overweight position that we have. And within that, travel, which is aviation and hospitality, are two of our large bets.
Thank you so much, Nitin, for joining us, giving us your view on the markets, your view especially on the BFSI space, and also what lies ahead as far as market fundamentals as well as valuations are concerned. Thanks once again. Well, moving on, have a look at the markets. Some stocks have seen significant buying and the market continues to trade with significant gains. The small cap index now up almost 2%. Some of the names that are doing quite well, especially in the broader end of the markets, are the NBFC pack. So names like AB Capital, REC, PFC, these are some of the stocks that are now trading near the day's highest points. The other set of stocks that are doing very well in the session today are actually the capital goods names. So Larsen & Toubro, the largest capital goods maker in the country, that particular stock today seeing significant gains, one of the top gainers on the Nifty. Even names like Siemens & Cummins have bounced back quite significantly from the recent low. The other set of stocks, Rima, that are doing quite well is actually the consumption pack. So some of the consumer names, especially names like VBL, something that we highlighted earlier today, that stock is up almost 5%, and there's a positive catalyst watch from Citi as far as Varun Beverages is concerned.
Okay, we will get into a short break, but as we do that, a quick programming note. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing the boundaries, making an impact, shaping the future. Nominations are open. Scan the QR code now. Submit your entry for SME Champion Awards Season 2. Welcome back. It's now inching towards 24,800 on the Nifty. Just two Nifty stocks in the red. One of them is Bajaj Finserv. We've been discussing them. And the other one is Bharti Airtel, which is just down close to about 0.3%. And one of the reasons could be the FT article, which talks about Sunil Bharti Mittal weighing increasing his stake in British Telecom, and the street fears that this could come at the expense of selling his stake in Bharti Airtel, because that's the only way for him to get the money to up his stake in British Telecom. So that could be a factor weighing on Bharti today. But outside of that, look at the way individual stocks are moving. Ola Electric, 14% higher. So it's erased yesterday's 7-8% loss and gained some more. Big move. It's added about 4-5% in the last 1 hour. AU Small Finance Bank is now back in the green. Mastec is a big mover, 14-15% up on that. You've got MobiKwik, Paytm. MobiKwik fell yesterday because of that IPO lock-in coming to an end 3 months. But today it's rebounded. Paytm is a big mover. Aircon on the back of the order win is up nearly 5-5.5%. So things are looking up. Triveni Turbine is a smart volume and price buzzer today. Stock up close to about 10-10.5%. Very smart looking screen. Positive advance decline ratio inching towards 2,200 stocks, advancing for just about 450 stocks in the red right now. Well, that brings us to a close on Trading Hour from the entire team. Thank you for watching. Don't go anywhere. Halftime report is up next.